Good morning. Welcome to Stock Market Today for Tuesday, December 10th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today, where you can sign up for a free email where a lot of the content for this show comes from, as well as gives you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So U.S. equities ended lower in Monday's trading. Actually closed near the worst levels of the day, with the market remaining keenly focused on the progress of the U.S.-China trade talks. Treasuries were unchanged to slightly stronger. The dollar was little changed on the major crosses. Gold was slightly lower on the day, and WTI crude was down 30 basis points after rallying more than 7% last week. And as we get to this desk this morning, futures were under pressure for most of the morning, but they are rallying a bit here in the early going. Asian markets were mostly lower overnight. European markets were weaker, with Germany underperforming. Treasuries are stronger across the curve. The dollar is slightly stronger against the yen, slightly weaker against the euro. Gold up 30 basis points, and WTI crude is up 40 basis points. Let's dive in, look at the structure of the equity market. Stocks dipped yesterday on lack of new tariff news. There was really nothing else driving it. I think the market was expecting some sort of update on the tariff situation, especially with the latest round of tariffs set to go into effect December 15th. But as we come to studio to record this show, U.S. and Chinese trade negotiators planning for a delay of December tariffs. That's the headline coming across the tape right now. So what do we have here? Near-term support in the 30-30 area to 30-50 zone, then below that at around 3,000. Resistance, which we tested on Friday, or came very close to testing, is up near the pre-Thanksgiving highs at 3150. We still contend that the break from this July to October trading range targets 3,200 for the index to the upside. For those of you looking at SPY, that would be roughly $320. RSI is holding in bullish ranges. And what's important to us is that on that 3-day pullback last week, RSI did not get below 50. And then promptly rebounded with price. So that's what we mean when we say that the indicator is holding within bullish ranges, and then Chaikin money flow remains bullish, actually trading up near 12-month highs. So indicators lining up with what we're seeing in price. Odds favor a continuation of the rally into year end. And now we get the added data point that we are going to delay, or potentially planning for a delay of the December tariffs. Let's dive in. What are we talking about in the note to Chaikin Analytics clients, which at this point, the first data point has already become stale. Stocks dip as there is no new news on tariffs. That was yesterday's news. Bond proxies are now testing relative support. It's Tuesday. We do our relative strength work on Tuesdays. We've been talking about how the bond proxies have been under pressure as yields have been going higher. We're going to take a look at the fact that they're now testing relative support. Technology is consolidating after a strong move higher, still remains one of our favorite areas of the market. Healthcare sees continued relative strength, and this is emerging relative strength, and it's been a newer area of focus for us over the past couple of weeks. And as I said, futures were pointing to a lower open today, but that could be changing, right? News is hitting the tape in real time. Let's take a look at the major indices from a power bar perspective. The Dow down 33 basis points yesterday, but the power bar ratio still skewed in favor of the bulls, 6-4. S&P 500, 121 bulls to 87 bears after a 31 basis point decline for that index yesterday. NASDAQ was an underperformer on the day, 30 bullish or very bullish stocks there for 18 bearish or very bearish stocks. Small caps, slight outperformer actually, right? S&P 500 down 31 bips. Small caps down 21 bips. 729 bulls there for 276 bears. Still solidly bullish from a power bar perspective for small caps, which, as we highlighted yesterday, recently broke above key resistance. The IWM above 160. Bonds upticked yesterday, sending yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish, and the major indexes across the board are bullish. Let's take a look at our stock of the day now. Remember, the stock of the day is auto-generated based on our algorithm, based strictly on power gauge rating. And today's stock is Boston Private Financial, closed at 1128, down 9 basis points yesterday. So an outperformer. This is a bank stock, and we've been excited about certain areas of the banking industry. Boston Private, BPFH, has a very bullish power gauge rating due to very positive expert activity, strong earnings performance, and strong price volume activity. The financials are more neutral But when we take the 20 factors, 5 in each of these 4 categories, we come out with that very bullish rating. Strong trend above a rising long-term trend line and a strong industry group. You've heard us talk about the banks for the past few weeks. The issue that I have here, which anybody who's been following along with this show for a while should quickly be able to see, is that the market and model are not in agreement. That very bullish rating is met with a stock that's underperforming the market. The key to increasing your odds of finding a winning stock is not only the very bullish or bullish rating, but also a stock that's outperforming the market. So Boston Private does not fit that bill as of now, but we'll keep an eye on it, right? Money flow has been pretty positive throughout the year. It's currently oversold, but you can see just the choppy range, right? Stocks was a big underperformer, tried to get going to the upside, and now it's failed. Very, very choppy range. I think if you're a breakout trader, you're watching 1250. If you're following along with our process, you're waiting for relative strength to improve. It's not quite there yet, but you know what? I have to be perfectly honest. This is a name that I had not come across. In all the work that I do day in and day out here at Shaken Analytics, it's a name that I had not come across. So now what am I going to do with it? I'm going to add it to a bullish watch list, and I'll run screens on that watch list. And when the stock is, still bullish and outperforming the market, it'll pop up on my screen and potentially be a more compelling opportunity as a bullish idea, especially if the financials and in particular the banks remain outperforming sectors and industry groups respectively relative to the market. Let's take a look at our sector tracker now. The movement of the major sectors over the last 5 days. And, as I point out in my note today to our clients, in the near term, the defensive areas, the bond proxies, and the consumer areas have become a little bit more little counter trend rallies, if you will, right? Here's real estate at the top of the list. Energy, definitely a counter trend rally. Well, not definitely. It appears to be a counter trend rally, in my opinion. Financials still outperforming. That's an area of the market that we have liked and continue to like. Comms and staples and materials are outperforming the broader market. Healthcare, utilities, tech, kind of middle of the road. Discretionary and industrials underperforming. But it's interesting to note that over the past 5 days, all of the major sectors of the market are higher, right? So the key for now is where's the relative strength? And what's your time frame, right? On a short-term time frame, the relative strength has actually been in the defensive areas in the market. But from a trend perspective, it is still the cyclicals that are doing well and where we are remaining with most of our focus. Taking a look at our industry in focus now. It's an area of the market that we've liked a lot over the past few months, and you can see why. Home builder services. Over the past 6 months, it's outperformed the S&P 500 by 4.37%. And the power bar ratio, which measures future potential, right? This is what tells us the odds of outperformance are likely to continue. Very strong. 13 bullish or very bullish stocks for 2 bearish or very bearish stocks. It's currently ranked number 4 of the 21 subsectors that we look at, and it's moved up 3 slots over the past week. So what do we have here? We have a market in an uptrend, and we have an area of the market, home builder services, that's outperformance, where we feel like that outperformance is likely to continue. So we want to look for potential opportunities there. Names like M&I Homes, MHO, TriPoint, TPH, and Pulte, PHM, all with very bullish Chaikin power gauge ratings. And we're going to do it today, instead of looking at the group, is we're going to look at one of those stocks, because I think Pulte does look compelling here. Pulte has a very bullish rating. It's in a strong trend, strong industry group above the rising long-term trend line. And we just told you that the home builders were a bullish group. Market and model in agreement, as they have been for most of the past 12 months, right? Very bullish stock, outperforming the market. Look at the intensity and persistency of this bullish money flow. Not only are we intensely bullish, but we've been bullish for months. Stock is rounding out of an oversold position as it trades above that rising long-term trend line. I think what we have here is a stock that made a high, kind of went into a consolidation, and is now setting up again as a potentially bullish idea. I think if you're looking for opportunities here in the market, I think you want to take a look at a name like Pulte Homes, ticker PHM. It's a name that we've highlighted numerous times over the past few months for our clients, and we're going to highlight it here again today for this show. Taking a look at what's trending now. Yesterday's S&P 500 gainers and losers, our movers and shakers. Not a lot in the way of company-specific news as we get towards the end of the year. Freeport-McMoRan FCX up 3.95%. Copper's been strong of late, and that stock is highly levered to copper. JW Nordstrom's and Kohl's, nothing company-specific. Kind of interesting that Macy's caught a downgrade yesterday from Goldman Sachs, but these department stores did trade higher. APA has been a volatile stock of late, catching a little bit of a rebound. Remember, that stock was under a lot of pressure last week. And consumer products names had a decent day yesterday, taking Kraft Heinz higher by 2.7% on the day. International Flavors and Foods, IFF, selling off as they are rumored to be bidding on a business from DuPont. Abiomed, no real news to send that stock lower by nearly 4% on the day. Ulta, remember Ulta, following their earnings report, was up 11% on Friday, gave back a little over 3.5% of that gain yesterday. IPG Photonics, didn't see any real news there to drive trading in that name, down 3.25%. And Seagate, STX, down. The memory and the drives names were under pressure yesterday. If you take a look at a name like Micron, that was under pressure. Western Digital under pressure, and Seagate down 3.17% with the memory stocks trading lower yesterday. Let's take a look at what we're talking about today in our notes. Like I said, it's relative strength day. We look at the relative trends of the different sectors relative to the S&P 500 to get a sense of what's leading and what's lagging. And now you've heard us talk for the past few weeks, really the past month and a half, about how the bond proxy groups are lagging. And you can see it here. The top panel is XLU, the utilities relative to the S&P 500. The bottom is real estate on a relative basis. And you can see since early October, they have been in a downtrend. But what they are both doing now is interesting. They're testing support near their July lows. Remains to be seen now. What we're going to watch is interest rates. If rates continue to move higher, and perhaps this trade commentary does send rates higher on the day today, we would expect these support levels to give way, right? But if interest rates start to stabilize or actually move lower, these support levels will hold, right? This is the intermarket research that we do. It's why we pay attention to the fixed income area of the market, because there are implications here. Right now, we're testing support, but for me, I think the weight of the evidence still supports underperformance on the part of the bond proxies from a trend perspective. We continue to like the financials, right? Because as rates move higher, bond proxies come under pressure, but we would expect the financials, and in particular the banks, to do well. But we're watching these key levels, right? We never remain dogmatic in our views. When the facts change, we change our mind. For us here, the change of facts would be these support levels holding as rates start to move lower, leading us to believe that the bond proxies are likely to begin to move higher. Right now, not seeing enough evidence to speak to that. Tech consolidating against the S&P 500. Here's the XLK relative to the SPY. Still remains one of our favorite areas of the market, right? What we had here, strong uptrend off those late 2018 lows. I can't believe it was a year ago, right? It was a year ago, Christmas Eve, where everybody was worrying that the market was going to completely fall out of bed. That ended up being low. We had a sharp turnaround and a rally starting for 2019, and technology outperformed much of the way throughout that rally. And then we went into a consolidation in the summer before breaking topside and a strong move higher. And now we've gone into a little bit of a consolidation again, but I think the weight of the evidence supports tech continuing to outperform the market. Why is that? Well, first off, from a trend perspective, we're above the moving average with the RSI in bullish ranges. And on an absolute basis, the trend does remain higher. But let's take a look at it from a Chaikin perspective. The XLK has a very bullish ETF power gauge rating. And take a look at the power bar ratio. 19 bullish or very bullish stocks for 7 bearish or very bearish stocks. That leads us to believe that tech will resume its uptrend out of this consolidation on a relative basis. We continue to want to focus on technology for ideas. And one of the newer areas of the market where we've been focused on ideas of late is healthcare. Here's the XLV relative to SPY, takes the 200-day moving average, and now it's testing resistance. We think the odds favor a break of resistance. Why? Well, because RSI is shifting into bullish ranges. It's breaking out on an absolute basis. The fund has a very bullish Chaikin Power Gauge ETF rating, and 30-2 is the bull to bear ratio for XLV. So we're looking at healthcare now. That'll wrap us for today. I'll be back here tomorrow. Have a great Tuesday, everyone.